Welcome back. It's Focus on Earnings season full throttle, and we have a complete curtain raiser for you. Before we get to our guest, Pavitra is standing by with a synopsis of all the expectations that are doing the rounds on the street. Pavitra.
Oh, absolutely. This is what we've all been talking about, right? The earnings season kicks off today. So we've put together a list of what brokerages are expecting this time around. So first from CLSA, they see a good quarter this time around for Q4, but X of commodities. And for the sectors that are likely to post a strong growth, they have autos, discretionary, power, and financials led by banks, while IT and staples, they think will see reasonable growth this time around. The next one is from Kotak, where they expect net profit to rise 9% on a year-on-year basis and 8% sequentially for Q4. They also estimate EPS growth will come in at 806 rupees for FY23, and then for FY24 they expect 916 rupees. Moving on to Bank of America then, they believe that the street's earning estimates for both FY24 and then for FY25 as well could be cut in half. This is on high inflation, on rates, as well as on slowing demand. So that's a bit of a negative outlook coming in for FY24 and FY25. Then let's look at individual sectors as well. Citi has put out a detailed note on how they see the various sectors faring. So auto will see margin expanding further. This is on high volumes as well as low commodity costs. So all of that bodes well for the auto sector. For the lenders then, you also are likely to see a good quarter this time around. This is all from Citi. Advances growth is likely to be strong, and we're also likely to see NIMs improve in this quarter. Then for the cement pack, they think that the EBITDA per ton will see a sequential improvement. So once again, good quarter expected for the cement players. Then next on IT, because that is the one we have today as well, and all focus is on that. So that is also expected to see growth of 1.8 to 0.9%. This is on a sequential basis, but it is really going to be the FY24 guidance that we will all be watching very closely. So that is important on the IT pack. That is everything that we're watching in terms of guidance. Moving on next to pharma, we could see flat growth this time around, barring some fluctuations around Revlimid, but we may see margins this time supported by moderation in US generic pricing. So that would be something that is key to watch. Then let's look at the capital goods space. Citi is focusing on commentary which will come through on capex, on orders, as well as exports. So all of that will be important to watch. While for staples, they are expecting slightly better demand in this quarter. But once again, the commentary will be really important. We have been talking about that K-shaped recovery. So we want to know what the rural picture is looking like and what is happening with price cuts. And lastly, for telecom, Citi is working with estimates of marginal growth in the ARPUs. That is something that we will watch for the space of telecoms. I'm finally going to wind down with a list that JP Morgan has put out on their candidates for upgrades as well as downgrades. So on low Q4 and FY24 estimates, JP Morgan sees Kotak Mahindra Bank, Power Grid, Torrent Power, Indian Hotels and Power Finance, PFC. All of these are good candidates for upgrades. These are just the top 5 by market size. And on the opposite, that is high expectations in Q4 as well as FY24. You have Bharti Airtel, Asian Paints, Ultratech Cement, JSW Steel and Adani Ports, which could perhaps come in for some kind of a downgrade this time.
Okay, got that. So those are some views from the street. Pavitra, thank you for that. Let's take the